Hey everyone, what's up? This is Mozart speaking. In this video, I'm going to give a pretty detailed breakdown of where we currently stand. When could this cycle potentially come to an end before a complete reversal or just before a really big correction? And in this video, I will analyze other indicators, not the technicals or the candles that are currently open, but the very basic fundamentals. Specifically, we'll look at the cash flows that are happening between large and small Bitcoin holders, as well as between long-term and short-term Bitcoin holders. And keep in mind that large holders can be either short-term or long-term, just like small holders. Specifically, we'll take a look at the cash flows that are moving between large and small Bitcoin holders, as well as between long-term and short-term Bitcoin holders. And keep in mind that large holders can be either short-term or long-term, just like small holders. So, it's basically either retail or institutional investors. I recommend that you watch this video to the end because the information that I will give you each of you will perceive it in your own way. So, I'll draw a certain conclusion from this information at the end of the video. But there's not much point in skipping straight to the end and watching my conclusion. It would be more sensible for each of you to draw your own conclusions. I'll just show you the information about what's currently happening with the flow of capital in the blockchain. And I hope that each of you will make the right decision after I show you the technical aspects of Bitcoin, basically. And I hope that each of you will make the right decision after I show you the technical aspects of Bitcoin. Basically, I think this looks strong, especially after that candle with such volume during Trump's inauguration. This area here is the zone of a new sideways market within the intraday timeframes. And basically, here we can consider going long, meaning anything above the mark of around $99,000. Any correction is a long opportunity, because if the price breaks through just from a technical standpoint, if we get this low with a solid close below, we could easily and quickly bounce back up, right here, closer to the $90,000 mark. So this zone is pretty strong, especially with that kind of volume. Right here, closer to the $90,000 mark. So this zone is pretty strong, especially with that kind of volume. And now, let's get to the main point, the analysis of the blockchain. Let's go. This is the chart of what's called realized capitalization, showing its net change within a 30-day window. So, how much it has changed over the last 30 days? It basically shows, in simple terms, how much money has come into crypto right now. This orange curved line is actually the line of realized capitalization. And this is its percentage change in the 30-day window. How does this happen in bull markets? We're in a bull market now, evident by the increase in realized capitalization, meaning money is flowing into the asset. Focusing on Bitcoin, most crypto investments are through it. As the market stabilizes, the growth rate of realized capitalization slows, but stays positive. The money supply growth rate over the last 30 days is decelerating. After the market moves to equilibrium, the change in the percentage realized capitalization decreases, but it still remains positive. It's just that the rate of money supply growth over the last 30 days is slowing down. As soon as the market finds that state of equilibrium, a new wave of momentum follows. Here we see something resembling a divergence between the indicator and the price, after which there's either a really strong correction according to Fibonacci. That's about 30 to 40% off the peak. In this case, it could either be a top for Bitcoin or a complete reversal into a bear market. For example, in 2021, everything was pretty much going according to this plan. Growth, then a decrease in inflow, another wave of growth. By the way, forming a divergence, a decrease in inflow, and the last little wave of growth. That's it. There's no new money coming in, and we're heading into a strong correction due to the Chinese ban. In this case, the price makes several new peaks, forming multiple divergences with the indicator, which leads to a very, very strong correction. The drop in 2021. So, with a 30% increase in realized money supply over the last 30 days, it dropped to 13%, which is about 2.5 to 3 times. Then it went from 22% down to about 12%, roughly a twofold decrease. And then it just started to fall. Then it went from 22% down to about 12%, roughly a twofold decrease. And then it just started to drop. Next, it has dropped from about 13% to around 4.5%. So, roughly speaking, about 3 times as well. According to these indicators, we can assume that there is some kind of balance. Either it has been found, or it is almost found, and the market is ready for a new impulse, which, in general, from my point of view, has already begun. It's either already happening, or maybe even close to wrapping up, so I can't really guess that part, but a new impulse has kicked off. You can see it by looking at the peaks from December 17th, which is what confuses me. What confuses me is this picture, 1, 2, while the price is making 1, 2. So, if you zoom out and look beyond the daily charts, and not even weekly time frames, but specifically monthly ones, we have quite a significant divergence here. I hadn't encountered anything like this before, and there wasn't such a prolonged period of divergences in the blockchain previously. When the first peak is formed, let's say around March-April 2024, and the second peak is formed in January 2025. So, with an interval of 9 months, 9 to 10 months, that's a really long interval, but it exists. And if we look at the monthly time frame, that divergence will be quite noticeable. Because for the monthly time frame, that's just 9 to 10 candles. That makes me a bit uneasy. And globally, this is quite a serious indication that maybe this current impulse, which has already started, could be the last one before a significant correction. The next chart shows the realized profit and loss with a 7-day smoothing, meaning it's smoothed on a weekly basis to filter out the extra noise. In the current cycle, especially over the last year, prices haven't changed much percentage-wise. However, compared to 2017, it's noticeable that when the net realized profit to loss drops, with a 7-day smoothing to around $200 to $300 million, we hit the bottom or start forming a bottom, followed by a new wave. Starting in 2024, the entire last year showed a similar pattern. On this dusty impulse, this is either the bottom, or something close to it, or the beginning of forming a bottom, after which a new wave follows. So, for example, starting in 2024, we had a pretty similar picture over the entire last year. So, it's like the acceptance of Bitcoin and then a correction after that. We dropped into the range of $200 to $300 million, hit it again, formed a bottom, and then moved towards a new peak. Then we hit it again in April. After Iran attacked Israel, we bounced back. After that, the market couldn't hold on, and we started to fall below that level, and, accordingly, we had a huge sideways movement, lasting a total of 9 months. In 2021, there was a very similar picture on the bull run of 2021. If we take a look, this line has also worked out almost perfectly. So, there was an impulse, a correction to the $200 to $300 million mark in realized profit to loss, another correction right back to that same line clearly, and then another one back to that same line clearly. Everyone couldn't hold on. The Chinese ban caused us to go into a downward trend for a while. Mixed. At this moment, we've basically marked a local bottom. There we touched it. Right on point. The range is 200 to 300 million. About 3 words were said here, and we moved into a new wave of impulse, meaning the realized profit started to grow again. This means that the phase of this consolidation, the phase of low volatility, is over. And as soon as Trump came to power officially during the inauguration, we started this impulse, this compression, It was set in motion, and the phase of momentum began. I want you to understand where I'm going with this. That this impulse that is now going on, it may be the last one. Here, unlike the previous indicator, I'm showing you, there is no divergence on the monthly time frame. Take a look here. The peak in the indicator corresponds to the peak in price. Corresponds to the peak price, but this is a sharper indicator. If we use a 30-day smoothing for the monthly, which corresponds to the monthly candles, here we use weekly smoothing. However, there is likely to be a divergence in the weekly candles. So, we worked out a correction here of almost 20%. And now it's happening. That was a daily divergence, and now we're seeing a weekly one. So, I think we're going to see a weekly divergence here. And how Bitcoin will handle it is unknown. And this also scares me. The next chart basically shows the same thing, just in a different profile. Here we have the absolute realized profit plus the realized loss. So, how much money is circulating in total? Right now, it doesn't matter whether it's profit or loss. As soon as we hit a certain number, which in the current and past cycle was $1 billion, this has always indicated, especially after bullish impulses, that a correction is due, meaning that after the impulse, an equilibrium was found, and we can start the next impulse, which is by no means guaranteed to be as strong as the previous one. So, this blue horizontal line marks the $1 billion mark, and we can start the next impulse, which is by no means guaranteed to be as strong as the previous one. So, this blue horizontal line marks the $1 billion mark. Look at how well it performed during the bull run of 2021. We hit it 3 times, after which we bounced back. Next, we also drew the divergences here. 1, 2. We actually drew a 4-fold inch and then took a dive down. We've come to the same point now. After the peak distribution of profits and losses at the $1 billion mark, we consolidated. The market has set a bottom and is moving into a new wave of impulses. There it goes. We're going up. Again, realized profit to loss. But what's important here? There's also no divergence on the monthly time frame, but there's a divergence on the weekly time frame. Weekly unloads more. Now it's going to be a week, and the unloading on the weekly will be much more serious than on the daily. This is basically the given indicator. It duplicates the previous one, just with different parameters. The next metric is also quite interesting. It's called binary CDD. You could go around in circles explaining this metric for a long time, but in short, it's a metric that shows how fast it operates. So-called coin days are being destroyed. If in 7 consecutive days, many coin days are destroyed, large means above the historical average, a 7-day window is taken. And if within that 7-day window there are 7 consecutive days, a large amount of coin days is destroyed, which means large. This means it's above the average for the entire history, so the cumulative average is what this metric shows. This is the kind of barcode referred to as the red line, meaning peak distribution. It showed us the distribution at the end of November, indicating that for 77 days, large volumes of coins were destroyed as long-term holders sold off. This lasted about 7 to 10 days. A slight divergence on the daily time frame led to a nearly 20% correction, reflecting the bull market's movement. This pattern repeated. At the start of 24, a similar pattern emerged, leading to a sideways movement, followed by 21. Coin day destruction was more pronounced, occurring in stages, similar to 17, the previous bull market. It was a complete destruction. Here, the destruction of coin days was pronounced. In 2017, it was destruction. Current holders differ from 2017's in time frames and volumes. It's just complete destruction here. But, again, the current long-term holder is very different from the long-term holders of 2017, primarily in terms of time frames, and, secondly, in terms of volumes. So, comparing it to 2017 is pointless. The best comparison would be with 2021, or even better, just with the current bull market. In other words, how things have been going since the beginning of 2023. Comparing it to 2017 is pointless. The best you can do is compare it to 2021, or even better, just with the current bull market. So, that's how things have been going since the beginning of 2023. So, we've entered what's called a safe zone, where coin days have practically stopped being destroyed. There were even a couple of days when there wasn't a single spike in coin day sales, with volumes above the cumulative average. This is also, it was, the formation of the bottom, and after that, a new peak started. That is, most likely, we will see another red barcode like this. Holders. That long-term holders will start selling off their large volumes of old coins again within the 7-day window. And we'll fill this 7-day window with those 7 days. Within the 7-day window. And we'll fill this 7-day window with those 7 days. And here, we really need to pay attention to how much they're selling, what volumes they're moving, and how long they're doing it. So, that's for sure. We'll need to combine that with the technical picture I showed in the last video. Considering that the entire current cycle is really stretched out, and there's not as many coin days as there were, for example, at the beginning of 24, or at the end of 24, you could basically count them on your fingers. And there were only 3 episodes. 1, 2, 3. I don't think we'll see anything like that again. In 2021, especially in 17, when these red barcodes simply followed one after another. We're unlikely to see this. So, we need to keep an eye on it, and as soon as it shows up, we should try to close out large positions along with those long-term holders. It's the same indicator as the binary, just sharper and more focused. It's not based on the parameter of sitting. It's based on the number of coins that long-term holders are currently holding and just on their changes. It's not based on the parameter of just sitting, and it's based on the number of coins that long-term holders are currently holding and just on their changes. We're looking at the window, like when the total supply drops, that orange line, and we're checking how many days it falls within that 7-day window. So, pay attention to the bottom part. Take a look at the bottom part of this chart. The green line of hits. The green line indicates that within the 7-day window, long-term holders are selling these coins for all 7 days. The red line indicates that they're selling for just 1 to 2 days within that 7-day window. If there's not a single gray bar on the histogram, that means they haven't sold anything at all within that 7-day window. The red line indicates that they're selling for 1 to 2 days within the 7-day window. If there's not a single gray bar on the histogram, that means they haven't sold anything at all within that 7-day window, or they were just accumulating, for example. Now we've hit the green line again, and again, this indicates that the previous binary CDD indicator will soon show us too, or they were just accumulating, for example. Now we've hit the green line again, and again, this indicates that the previous binary CDD indicator will soon show us too. This red barcode right here, because this indicator is a leading one. It only takes into account. He focuses on long-term holder changes. Fewer coins mean nearing the green line. More coins bring him closer to the red line. If there are more coins or fewer coins, if there are fewer, he starts getting closer to the green line. If there are more, he gets closer to the red line. The previous indicator also takes into account the age of these coins, both their age and the total volume. They're just black or white, so to speak, but this one is always leading, meaning we're already starting to hit the green line here. So this momentum is already, so to speak, in full swing. They're just black or white, so to speak, but this one is always leading, meaning we're already starting to hit the green line. So this momentum is already, so to speak, in full swing. That's what we're seeing. So this momentum is already, so to speak, in full swing. This is what we're seeing. And this blow is $110,000. This is already somewhere around, possibly even the middle of this movement, if not higher. The next chart shows the so-called interaction speed of traders, investors, and, well, overall market participants with the exchange. The higher the speed of interaction, the more important it is for the price. The more stable the current price range is, or even just a specific level that Bitcoin has reached in this case, and the more stable it is. So, here we have a breakdown, specifically for short-term holders and how they interact with the exchange. This is the light red histogram. For long-term holders, this is the blue histogram. But what's important here is something else. Not at all. They translated it into absolute numbers. Bitcoin going to, or from the exchange, specifically the divergence. In other words, does the new price peak correspond to the previous volume, meaning the past peak, along with its interaction speed? And here, it works exactly the same way as in any classic indicator. The same kind of divergence and convergence can be applied. So, for example, notice how this played out at the beginning of 2024. We saw the first peak. After the approval of the Bitcoin ETF, we saw the next peak in March 2024, which was lower than the previous one according to the indicator. But for long-term holders, there was exactly the same picture, after which we transitioned. Well, not us. And the price has entered a 9-month sideways trend, with dips below $50,000 since August 5th, 2024. If we look at the bull run of 2021, everything developed exactly according to the same scenario. There were just a few peaks there, 1, 2, 3. Roughly speaking, the price made 1, 2, 3. Triple divergence is a failure, meaning it works, like a classic, stochastic, like a classic RSI. But at least this, it's not just a result of the price. It's the internal features of how people interact with the exchange. So, if the RSI is merely a consequence of the price, here we see what's happening with real money and people's emotions. And right now, again, what are we seeing? With people's emotions. And right now, again, what are we seeing? We're seeing a weekly divergence. A new impulse has started, but it's already clear that it's happening and there's a small chance it will be higher than the previous one. And the price has already made a new high. It made a new high, but not nearly as eagerly as it did back in November. After Trump's victory, there's this weekly divergence, and there's also a monthly divergence between the peak from March-April 2024 and the current peak. This is a more global divergence, essentially. The broadcasts of the first indicators I showed you with the 30-day change, pay attention to that. Next up is one of my favorite indicators that really assesses whether an asset, in this case Bitcoin, is overpriced or underpriced. It's the ratio of current demand from the main cohort of demand, which is now the cohort. All wallets holding up to 100 Bitcoins are absorbing over 80% of the new supply in relation to the monthly minting of new coins, meaning in relation to the production by miners, to the mining of new Bitcoins, roughly speaking. So, here's the thing. In this picture, how do we interpret the data? So, if we see a descending histogram, it means distribution is happening. That is, holders, all wallets with up to 100 Bitcoins, are selling off. That is, if we see a descending histogram, it means that distribution is occurring. So, holders, all wallets with up to 100 Bitcoins, are selling off. If there's accumulation happening, they're actually buying more. So how did it usually work? In normal markets, of course, we have a sell-off on the new impulse, which is generally logical. People are locking in profits. Next comes the correction. After accumulation crosses or touches the blue line, representing the rate of new Bitcoins being mined, crossing it means demand exceeds new Bitcoin production. Historically, this is a great point for buying or building positions. The blue line shows the mining rate. Crossing it indicates demand surpasses production speed. Historically, this is a key point for buying or building positions. So historically, this has been a great point on regular markets either for an immediate buy or for building positions. And after the last impulse from the beginning of 2024, this state lasted roughly from August to October. So right now, we're in this phase for about a month. October. So, right now, we've been in this phase for about a month. And historically, this has been a great entry point. However, after we saw this absorption, the price started to go up again. This indicator is now going to start bending. And I suspect that the new wave of impulse won't be nearly as pronounced as this wave. And this will also create a kind of divergence that will show a discrepancy along with the price. And I suspect that the new wave of impulse won't be nearly as pronounced as this one. And this will also create a kind of divergence that will show a discrepancy along with the price. And this could lead to a much more serious correction. Well, for example, in 2021, going back to that, it was exactly like that. So, here's the first wave of distribution, the second wave of distribution, and the third wave through. Everything here was in 2021 through a triple divergence. It was strong, this narrowing, in distribution. And the price was hitting new all-time highs, after which we saw a pretty serious drop. Next, we're crossing the blue line, and a period of absorption starts. These centuries, cohorts of 0 to 100 Bitcoin holders, and a new wave of momentum that beat the April 21st one. Right now, we've already broken the December high, and the distribution of the new wave has already started. But I'll say it again, considering the volumes from the first distribution wave in November, I have serious doubts that the new wave of distribution will surpass the November distribution wave, and there's definitely going to be a divergence here with a probability of 90 to 95% that the new wave of distribution will surpass the November distribution wave. And here, a divergence will definitely form with a probability of 90 to 95%. So, I'm getting ready for that right now. And to not keep you in suspense, let me show you the last metric. It's not the easiest, but it's very effective. The blue line, what does it show? It shows how much supply there is. Roughly speaking, from the total circulation in percentage, it was collected in the range of 15% of price movement. We take the current price, adjust by 15% up and down, and observe supply accumulation within this range. A blue line at the top often signals a historical high, around 30%, indicating prolonged market stability and a potential bullish move. In a bear market, the chance of an upward move decreases, and this range widens. So, the market has been without volatility for a long time, which means it's going to move somewhere soon in a bullish direction. The probability of going up in a bear market is, accordingly, down, and this window is going to be significantly widened. So that means the price is very likely to move more than 15% either up or down. Typically, in the context of divergences and regular markets, it can happen like this. So we have a period of low volatility. Supply is accumulating. Then an impulse wave occurs. We reach a new level. Then we accumulate again. But we don't surpass the previous peak. Next, we accumulate again. But we don't surpass the previous peak. Next, the price goes up. We merge again. And that's where divergence with the price forms. The final one, for example, was right here. Here's the first wave of growth on the rumors about the Bitcoin ETF, and the second wave of growth came with the actual approval of the Bitcoin ETF. The price made new all-time highs, but the indicator for new highs didn't show that. Divergence, and we went into a multi-month sideways movement with a correction below $50,000. I assume that the same thing will happen now. Just taking the range into account. Where have we gone? We have gone as far as a 30% offer within a 15-day window, after which it fell all the way to my level. There was a 3% chance of Trump winning, down to 3%. By the way, speaking of historical lows, we dropped down. And in bullish markets, this has often been either the end or the beginning of the end. So, for example, in 2017, it was 23%, 2 hits. In 2014, it was 1 to 2 hits. And in 2021, we didn't quite make it. So, 2020, by the way, was about the pandemic. But that was already a turnaround going up in a bear market. And here we get. This hit is really strong. This volatility was really significant. And the price just jumped out of that window and made this range extremely wide. Extremely wide. And just statistically speaking, after such ranges, there usually follows a really strong correction, a very strong one, which, most likely, from my point of view, considering those, the analysis can return the price to the $85,000 mark from the price we are now coming to. Let's say it's going to be $120,000. Calculate how much that would be in percentage terms for this correction, meaning right now. So, from everything I've shown, I can draw the following conclusion. Yeah, we started a new wave of growth. First, we've already surpassed the high. This all relates to the first point. Second, a new wave of growth based on the strength of the indicators, everyone that I just showed you. With a high degree of probability, it will be below the first wave of growth from Trump's victory. So, the November wave of growth. That means we'll see a divergence somewhere on the weekly time frame, and somewhere already on the monthly time frame. Such divergences lead to very strong corrections or a reversal into a bear market. I'm not under any illusions that Bitcoin will be worth $1 million or even $250,000. Here are some marks that certain hedge funds will deliver, which at some point in the future are generally achievable. I'm looking at the real picture right now. Can anything change this situation? Can anything cancel out all these divergences and the obvious weakness in the indicators? Maybe if Trump directly says that we're starting to build reserves right now and we're about to start vacuuming the market. The formation of this weakness. Maybe if Trump directly says that we're starting to build reserves right now and we're about to start vacuuming the market. Like BlackRock does, buying 1 million Bitcoins. Well, as he mentioned in his campaign promises. Yeah, it's quite possible, but even then, it's not a sure thing that this will somehow help the market weather at least a reversal into a bear trend, but a deep correction is unavoidable because this promise was already built into the November growth. Because Trump came out and won, largely thanks to these promises. And the price of Bitcoin, among other things, went up. Hoping that Trump would win before his victory, and after his victory, hoping that he would actually deliver on it. His promises, so a lot of that is already factored into the price. And the third conclusion. This is what we need to keep a close eye on right now with these indicators. Binary CDD, distribution among long-term holders, divergences forming. When will the shrimp, crabs, and other fish, which are called small holders, start selling off heavily again? Divergence will form on them, including in volume and funding on the exchanges. and make the decision to exit along with them. And first and foremost, along with the long-term holders who own large amounts of Bitcoin. And that's what I'll be focusing on in the near future. That's my conclusion based on the current picture. I think we're seeing the last wave of growth for Bitcoin right now. Well, or one of the last ones. Maybe there will be two more, just like in 2021, with a triple divergence. I can't predict that. But it's clear that we probably won't surpass the November wave. It was too strong. And the distribution was too strong during that November wave. That really scares me. In combination with the monthly divergence across many indicators, I'll be keeping an eye on these charts and giving you the latest info because it's really important right now. And I hope that each of you can also draw your own conclusions from all these indicators that I just showed you. It was more of a complex lecture than just a review. If you like this format, give this video a thumbs up so I know I'm doing this right, and that I'm not wasting my time on it. Thanks everyone, this was Mozart. And I'm not wasting my time on this. Thanks everyone, this was Mozart. I hope we can get out together with a nice market turnaround. Have a great day everyone, and goodbye.